Let's go across to Mahantesh, the head of retail research at SBI Cap Securities. Mahantesh, I got to begin by asking you first up, what is your outlook for 2019? The one big trigger, for example, is definitely going to be elections, the trade war, the ceasefire. Where is that ceasefire? Look what the kind of headlines that we're getting today from China. So I would imagine volatility will still be the name of the game in 2019, but the big question also is that could we enter a bear market? That has been some of the fear if you look at what's happening globally.
No, on the contrary, I think of the two events that you mentioned, I would rather pick the other event, which is the Fed's interest rate policies. We have had 4 rate hikes in 2018, and Fed has already indicated that they will have only just 2 more. So it is a little more dovish in 2019 relative to 2018. And the Fed is also talking about how recovery is happening not just in U.S. economy, but also globally. They do highlight risks that exist, particularly the trade tensions that you have mentioned. But nevertheless, what we conclude from this assessment, and for us that being the top event, the dovish stance of Fed will make the markets actually more better in 2019 relative to 2018. So we should have a good year ahead.
Right. Mahantesh, when we just look at, what's happening in terms of Outlook 2019, such a big, chairman of Tata Group is starting about cautiousness about, things going into 2019. You think investors are already cautious going into the next year?
I think the perspective, you have to understand the perspective from where the TCS, or Tata Sons chairman is coming from. He's essentially alluding to the fact that global conditions are not so conducive for their group of companies. As you're aware, most of the Tata Group companies now have dominant revenues or sales coming from global streams, be it JLR, be it TCS, or Tata Steel. So, therefore, the statement of the Tata Sons chairman relates to the global developments. As far as we are concerned in India, we should be having relatively a better trade for markets ahead. Yes, there are some certain volatile events that will occur, but those volatile events typically occur for 2 days, 3 days thereabout, and markets sort of forgets them. So between the global outlook that is a challenge for Tata Group companies versus the Indian equity market outlook, I think the Indian equity market will have far better days than global equity markets.
While you talk about the global risks that exist for the Tata conglomerates, there's one big, the biggest worry perhaps, Mahantesh, would you agree with this, is Tata Motors. You've got Brexit, look what's happening in China, the import duty, the slowdown in Jaguar Land Rover, and the domestic sales, Tata Motors has not been able to be in the fast lane or make inroads in. So that's as far as Tata Motors go, but we're also talking at a time when auto sales generally have slowed down for the entire market. So are you worried about this sector in particular?
Yes, I will be very worried about the sector per se as far as the Indian markets go. So automobile sales are indeed slowing down, and the outlook ahead appears that they may not be able to post any better sales growth than what they would have done this year. That's simply because you also have structural events coming along the way for the automobile industry, including the emission control norms and things related to that. As far as JLR is concerned, the concerns are far more wider. Not only are they facing a sales slowdown, they are up against a huge amount of competition. Again, there in globally, structurally, a lot of things are changing. The world automobile market is getting slowly electrified. That means you have more and more EV plays coming in, and that's becoming a bit of a challenge for JLR. And the other challenge is that on the financial side or on the balance sheet side for JLR, you will have a company which was so far cash rich becoming suddenly moving into the debt side. So you will have JLR getting indebted more and more. So yes, JLR is a worry for Tata Motors, and the domestic market may not necessarily help it hedge, provide a hedge against JLR's poor performance.
Mahantesh, just when we talk about the auto pack, what is your view as far as Tata Motors is concerned? It's been one of the big underperformers this year in terms of stock price. What essentially do you believe how investors should approach Tata Motors?
See, we've been generally advising people to avoid Tata Motors. This has been a standard advice throughout the year of 2018, and I think that would still remain the same when we go into 2019. For reasons I just enumerated. JLR is a big problem for Tata Motors at this juncture. They have acknowledged the problem, and therefore they are working towards towards cost reduction and so on and so forth. They have already guided for a lower capex, if you recall, after the last results. So yes, the problem is there, and we are telling our investors to stay away from Tata Motors.
Right, Mahantesh. Thanks so much for that.